Hello, everybody. Today, I have the pleasure of introducing DWG Capital Partners, and joining me today is their president, Judd Dunning. Thank you so much, Judd, for joining us.
Oh, we're excited to work with your company. Excited to be here. Thank you.
So let's dive right in and tell us a little bit about who is Judd Dunning. What is your background? How did you come to be part of the DWG Partners family?
Oh, thank you so much. So I'm a third generation American real estate. We were developers down in Cuba and throughout the East Coast. My granddad was actually he came from digging ditches to being the biggest GI housing builder after World War I. So we've been in the real estate realm for a long time. I'm 20 years in the business here in Los Angeles, is where our office is in Texas. I started humbly Keller Williams Commercial when they were with Starbucks. Went over, I was doing a lot of retail development. My first year, I did like 7 different malls around the United States. And they're like, what are you doing here? And then I got scouted up to Sperry Vanessa, mid-market American company. Did triple net retail throughout the United States in development, as well as multifamily and industrial. And then I went to Newmark, Grubb Knight Frank. I was scouted again. It was really hard to get in then. It was before the big merger happened. They were the biggest IPO for American real estate about 6 years ago. And I turned 50. I gave myself a 50% raise, and I opened DWG Capital Group proudly last year. And we've done over 13,000 units. We work in every asset class. I'm 50% debt and equity. I do a lot of debt and equity placement. This year, we've done a couple $100 million of that as for now. And also last year, we proudly did $500 million under the new brand. And I was nominated for Los Angeles Commercial Real Estate Executive of the Year. And we did the $165 million Sony deal, which was a large institutional deal where we won the community deal of Los Angeles. So we've closed in 34 states. I'm a debt and equity executive. I've also done 13,000 units. So DWG Capital Group was just a natural transition. You get to a point where you've made your clients and banks rich for a very long time. I've been through many market cycles. And then you said, hey, I want to make those personal friends in our community. You want to make our investors wealthy. And that transition becomes really joyous. And that's when we moved to the principal side in industrial sale leasebacks. And now we're up to about 7 or 8 deals in this particular platform. And it's going very well.
That is very impressive. Thank you for sharing that. So now tell us a little bit more. I know that you've touched on it about DWG itself, but if you want to touch a little bit more on the actual history, the team that you've got behind you, the deals specifically, type of deals and niches, as well as your fuller track record.
Yeah, absolutely. So thank you so much. So really the team is the key element for this. Like, the way we say it is, from the click of the mouse, from the office to the house. So anybody who comes into working with us, what I want to bring is I'm a real estate junkie. I love stats. I love details. I'm very, very driven. We wake up at 5. We drop off at midnight. I just took my wife on holiday. We worked the whole time. She's like, get off the phone. But that's who we are, And I always say there's something important that we want to share with our investors, which is called the grind, the view, and the flow. And the grind is there's a certain intensity to make sure that real estate is a safe vehicle. A view is a smart strategy based in hard facts, statistics, and diligence. And then the flow is the synergy of the team. So, and actually, I'm going to be working on a book on that in time. That's a little preview of that. But, I've had the privilege of working with Goldman Sachs on a deal last year to mom and pops down the street. So, every box of commercial real estate has certain things that you want, like getting below replacement costs whenever possible, making sure the tenant is replaceable, the market rents are replaceable, the underlying land has multiple uses and strategies. And then also what we do with sale leasebacks is really digging into the credit and businesses. Unfortunately, now I've owned a few businesses as well. I've been around doing this for a long time. I think I've established myself well in the community. So behind us, we have a series of main players at DWG, which really is what we bring to the investors. So when you click in and through Lee and Rion and the team and into us, who you're clicking into, you've got myself as the CEO and the presidents making these choices and finding these assets. You've got Robert Bianchi. Robert has got multiple degrees in international taxes and regular taxes throughout the United States. He handles our cost seg, the business underwriting, and he ensures as our controller and our accountant that the businesses that our tenant sees, because we invest a lot in American businesses as our tenants to get a higher yield. We have what we call ourselves a nearly add value strategy. You may not be getting those high 20 results, sometimes with our add value campaigns, but we're finding good businesses where we can make above the S&P credit and through sale leasebacks. And so we have to really analyze the businesses. So Robert comes in, works through the businesses. Then John Den, he's a subcontractor in our company. He also works with Mag Capital. So I have the luxury of being old friends with them. So we work with their credit team, and they come in and then they also do a full credit analysis of our tenants, what's happened in the past, what's happening forward, any liabilities, any over concentration of customer bases, et cetera. So we go deep into the tenancy and deep into the financials. Then on the property level, you have my experience. I've done a couple $2 billion worth of real estate over my career. So we're making sure that all the fundamentals are in place. And then legally, we bring in Dugan Kelly. Dugan's great at Kelly Clark. He's done about $4 billion last year of activities. He's the sponsors, the general partners chosen American partner for us. We've done 7 deals with him so far, and his team's plug and play. We usually come in with a very straightforward PPM operating agreement, making sure that we've got a good capital table, that everybody's secure. And then also Robert will come behind Dugan, and then we always use cost segregated accelerated depreciation. So not only are we getting those face yields and that preferential at the beginning of our deals, then our annual IRR and ROI projections, but then we really like to boost it by using sophisticated tax strategies. So that synergy between the legality of that and the tax laws of that, of course, consult your own accountant and your own lawyer whenever you do one of our projects. And disclaimer, but our team comes in and tries to tee up all the most sophisticated strategies so that you can have an advantageous true yield behind that. What's exciting about real estate, right? Why did the rich get richer? As we all know, you've got appreciation, depreciation, interest write-off, loan pay down, but also you have cost segregation. So what we're trying to do is we're either establishing an above market yield through a sale leaseback, because we're taking that American business and we're saying, hey, we're going to take your real estate, you're going to become our tenant, you're going to take that money, they're going to pay down their debt, or they're going to open up new stores and do what they do well in business. And we're going to own real estate and do what we do well. But we're also doing some add value work now. We're doing add value industrial. And we're also doing some multifamily, because I was in ARA, which is one of America's top 2 largest multifamily houses, because Newmark bought them. And I've done 13,000 units of multifamily as well. So I'm pretty active in that realm too. So that's our team. And then we have Emily in support and Mark in our IR. We actually have a new IR person coming on. And we have another key element is Don Moore. Don Moore is a 30-year veteran in environmental concerns. And if you really understand the rules of American environmentalism, they all changed in the 70s. So we have these cutoffs in our laws here in America that go back to the 70s. You have to go deeper. And then you have to either wrap those policies, or you have to have certain, you have to indemnify. So we make sure that we don't have any environmental liabilities. So that's pretty much our team. And we've got some great synergy between us.
That's awesome. And do you want to speak a little bit about your track record to date? You alluded to the number of deals that you closed a little bit earlier. Is there any more information? Yeah, sure. So I came in right after the American crash. So it was a really interesting period of time in 2005, 6, that era. 2004 is kind of when I started in the business formally. I was in film prior, so I'd been raising money for projects, et cetera. So I took this deviation. I did a little background. My uncle was vice president of Merrill Lynch for 42 years. So I was either going to go to Merrill Lynch or follow my dad. And I ended up coming out to the West here and took that adventure, which was great. But it was actually really similar. Raising money for real estate was so similar to the film industry. That's why I kind of took off as a start. I got into the business, and I have a good friend here. And I put him in at Keller Williams Commercial. And I said, how'd you do it, man? I said, you're number one. He said, last guy in, first guy in, last guy out, Dunning. So I just came into the office early, and I stayed every night until we mastered it. And I was rookie of the year out of 150 people. And that took us over to Sperry Van Ness, where we did just across the nation. So I've closed in 34 states. But then when I came to Newmark, the crash happened. So I was calling on loans, and a lot of the distressed loans across the nation. And we got a $180 million project that I secured. And
it kind of put us on the institutional map because there were we were working out loans and bifurcations and helping people with equity and solving solutions, pretty complicated capital markets, structured finance. And so we had to call the institutions one by one. So we got a good reputation, and we did some really good work there. And as a result, my job was we opened I was one of the founding members of West Los Angeles Newmark Knight Frank. Now it's Newmark. It's top 3 in the world. At the time, we were like 12th, and then we went to like 5th. Let me drink a little coffee here. Coffee is for closing. Okay. And so when we got into that situation, we started working for servicers and banks. So that means when the distress was happening, we had to go in with the 4 Ds of what I call the 4 Ds of deals: divorce, debt, dissolution, and distress. So we had to go in there and we had to solve as capital markets guy. And, I'm a God guy. So how can I serve? I'm here to learn, serve, and understand, and hopefully the same with our new investors here with you. And so the banks would give us like 10 assignments. So I put together assignments to solve different real estate problems all over the nation. We were doing note sales. I'm an FDIC secured broker. I guess I've been around for a while, but I hear myself talk. I think I'm younger until I tell my own story. So we just solved all these different things. And as a result, we were doing a mixture of what I call middle market deals, which is $3 to $20 million deals. And we were doing a lot of institutional deals. So just this year alone, we just did a $41 million project. We actually financed it with MAG because I still have a brokerage company, DWG Capital Group, and I have DWG Capital Partners. We're in that point now where I'm still servicing the industry because I've been around for a long time, and it opens up a lot of doorways for us. So then we did the Sony deal last year, which is $165 million in Culver City with Hackman and Goldman Sachs. We just did the La Paz deal. It took us 7 years in Malibu to their kind of Rodeo Drive there. We financed that through a company in Canada and another company associated with Disney. And then I just did a $41 million deal with Dax, as I said. And then we have another project that we're closing right now in Moab. We have a $90 million project that I was able to identify the financing for, as well as the bridge equity for the completion of a construction project that was distressed in Utah. So we still work across the United States, and we're still very active. I'm in multiple asset classes, but DWG's main product is we're doing sale leasebacks with great American businesses. Warren Buffett said, we're investing in Main Street versus Wall Street, and we're trying to mitigate all those possibilities. Take the sophisticated experience that we have just by going through the trenches. There's a lot of changes going on right now, making those right decisions for a good, strong yield with other alternatives to get through the midst. So done a lot of industrial, a lot of multifamily, 13,000 units, won a lot of awards. It's been a great journey, and we have a passion for real estate.
So speaking about the right decisions, there are a lot of opportunities that must come across your desk. How do you, as DWG, choose those opportunities that you're going to present and move forward to? And what is your DD process?
Thank you. Trial and error. I mean, I will say we've done these 7 deals recently, and I put offers on probably $150 million worth of projects. So I'm not compromising the principles of my investors. So if a deal doesn't work out, if it doesn't come to me with the right fundamentals, we'll kill the deal. I mean, we're your partners as a fiduciary. So that's most important. Now, do I want more deals to go through? Yes. We have about 7 deals in the hopper right now. The debt markets are really dynamic, so you really have to have specific relationships. I just want to talk about that for a second because we're bringing in someone else right now, and all we're going to do is talk to debt nationwide. So we're prepared because not only do I have a division that services other people, but you may find 50 to 75 basis point spread of enhancement, so I can pass that to the investor through a debt relationship. So with the American changes in debt, what's been going on the Fed, probably another 50 to 25 bip hike coming after these two, we are really in an interesting time in debt. And what we're doing with that is we're pivoting over to doing more add value deals. You're going to see that. I mean, we love long-term leases, but right now there's a little variation in the business right now where, we've got what they call cap gap, where certain people haven't come to the new market yet as debt drives it up. So we're navigating that market. So being very careful, brokerage relationships, private equity direct relationships. So do you have a business that you want to grow and you want to sell us the real estate? We'll work direct with them. And a lot of it is off market because I've got so many relationships.
Thank you for that. So typically in a deal, how do you create value throughout the value chain that you then pass on to your investors into deals?
Yeah. Well, the thing about sale leasebacks is, as we say, it's a nearly add value pool. The time we have a discussion, the time we get to a closing, usually months have passed. So that's why companies are driven by volume. So, you've got to figure out who the tenant is. You got to mitigate the debt markets, et cetera. We always put our feet on the ground. I've got a pretty good network through the United States. We descend the teams that I've told on you, the credit teams. And by the way, by the time you do that, you're spending another $50,000, $75,000 just to vet the credit and figure it out. These are not, it's important. It's one thing to buy a Walgreens. It's another thing to buy an American business. And then you've got to do background checks on people too. Particularly with a series of distress happening right now. We're buying something where we're PIs are looking into the backgrounds of our tenants because people can look really great on the surface. So we really have to do our work to make sure you're safe. So that's and it's a pleasure and an honor. And it's also, a fiduciary. It's just proverbial wisdom. So the teams will go down there. We'll do a standard PCA. We'll do we'll do our walk of the property. We'll do our accounting vetting. We've got an amazing analyst. We have two. Oh, I left out, sorry, one of my team members, Serge. We've got an amazing analyst who does everything that works for us. So we'll stress test the numbers on multiple levels. And then, while we're in diligence, we're looking for other strategies. What happens here if this happens? Is there a replacement tenant, which we don't plan on, but, or does the property have inherent value for this? Is there anything with the adjoining easements where we can get some land abandonment? We're looking at anything and everything to try to make sure that we've covered every asset of due diligence. And we're trying to think outside the box. But most of the stuff is, by the time it gets to the investor, most of it is, we want everything. By the time you'll see an OM, everything's mitigated. We have a clear plan.
Great. And now, predominantly, you've had US-based investors. You're branching out to accepting international investors through this partnership. So why is now the right time for DWG Capital to move to international investors, and why us? Yeah.
Well, I'm based in California, so I figured that I could surf in South Africa soon safely. Well, shark, yeah, I'm just kidding. That's my passion. I travel the world and surf. It's been interesting for us. I've worked a lot with a lot of people from the Israeli markets. I just did a deal with some people from China. We are very active. I guess I really don't think of it as so much as the international markets being that different. I do have a great respect for other economies, but I know American real estate, and I know that there's a lot of attraction here because we are, globally, we're a very big economy. Globally, we have a lot of capital moving through us. There's a lot of buffers with the stability of our system. There may be every company's got some political variations going on, but America's continues to be very solid, very internationalized. Our trade laws are really exceptional. So I focus on doing business only here, but we're a global community already in Los Angeles. My clients are from all over the world, and it's a pleasure. I think part of when you think about all the years of brokerage, I think of buyers from a place of compassion. Like when you're buying into something, that buyer wants to make sure they're not going to go bankrupt, make a bad decision. They're not going to buy the wrong asset. I treat them like family. And like, okay, what are your cares and concerns, right? The heart, the head, and the stomach, the gut, right? And then with the sellers, because you become a deal psychologist, you want to make sure that they're always leaving a little bit on the table for the next guy, right? You don't want to take everything off the table. This is a system, it's an ecosystem of value that we're all involved in. So what I like to do is I like to make sure that, most importantly, it's not about where people are from, it's that we share the same value system. As my dad said, always leave a little bit on the table for the next guy, and never do a deal you wouldn't do on a handshake. So it's really about like-minded thinkers. If you want to knock it out of the park every time, you're going to take more risks. So you want to make those decisions. There's the right deals to take risk on and to mitigate those. So when I look at a group like yourself, you're very intelligent. You've got a broad diversification. We get to have a pool simplified by working with you. which is excellent for us. We admire your systems. You came with a great reputation, and we're excited. As a fiduciary, I'm obsessive. So I love if the check comes in a day later, I'm like, get it out to the investors. And we really like to, the most exciting thing for me is if I focus on giving those yields to whoever is around the world, then, I get to serve, and then everything else seems to work out.
Well, thank you so much for spending this time with us and introducing us to DWG Capital Partners. We are very excited about our partnership. We look forward to a long and prosperous partnership for both of us and our investors, and really introducing all the upcoming deals from DWG to our investors.
Thank you so much. An honor and pleasure, and onward and upward.
Absolutely. Thank you, Jed.